While many of the crypto narrative these days is about yield farming and DeFi tokens, much of the permanence of the cryptocurrency industry relies on the pillars of providing privacy, robust tech, a strong alternative for people to be their own bank. An individual building such a solution is Ruben Merre, the co-founder and CEO of hardware crypto wallet Engrave, which calls itself the coldest wallet maker ever and features free products on its homepage for users looking to take the security of their coins to the next level. Image: Kryptonitesh first took note of crypto for the massive price swings the industry is known for, but quickly switched gears to building products and technologies for users in the space. In a recent virtual interview with community-driven crypto edutainment channel Kryptonites, Merre sat down with Kryptonites host Alex Fazal to share his thoughts on a range of topics affecting the crypto market today, such as the significance of privacy in the blockchain industry, the rise of stablecoin, growing crypto adoption in Venezuela, and if centralized crypto finance (CeFi) has a chance against DeFi apps. Here's what they said. Bitcoin as a store of value. Merre, after a brief background to Fazal, pointed out the ongoing stimulus programs in traditional markets have inflated the stock market to almost exhibiting a bubble behavior, which has in turn made the traditional market unattractive for retail investments if one considers risk versus rewards. It is not very interesting to invest in that, said Merre, adding that Coldest investment thesis has similarly weakened if one looks at the yellow metal as price action of the last 10 years. Holders barely made any returns, which made the asset unconvincing as a global hedge and, as a consequence, makes the crypto market a better bet for investors. Gold has hardly returned any money to investors in the past decade. Image: TradingView at 50% of the all-time high of Bitcoin, more or less. So if you think about it, risk rewards and about how small that market is. And obviously all the things you can list up as reasons, said Merre. He added, I think the crypto space is one of the most compelling when it comes to a risk-reward ratio. I think it is one of the best places to put your money today. How Latin America is turning to Bitcoin. Speaking of quantitative easing, Merre pointed out how similar processes in Latin American nations have led to abject inflation, which economic reports suggest have caused irreparable damage to the economies of those regions. But, as a strange silver lining of sorts, such countries are actually turning to cryptocurrencies as a store of value ahead of gold and equities to protect their wealth. Merre cited recent reports, as CryptoSlate has extensively reported on, to back up his claim. It is also where stablecoins come in, said Merre. This is an investment that is expected to retain or increase in value during times of market turbulence. But if we look specifically at stablecoins, then those are defined as an external reference that offers price stability. He added stablecoins also depend on the actual fiat they are pegged on a 1:1 ratio to. You could even have a stablecoin for the Venezuelan bolivar, but obviously, then the stablecoin wouldn't be very stable, right? Merre also explained how algorithmic stablecoins work in the real world. For example, we buy very long-term yield bonds or something, and we give back pure cash, and banks can similarly read again because they have liquidity and they can start getting loans again and make money. Because basically this back and forth of giving some money, putting some money back, that's what algorithmic stablecoins look like a lot. They do it automatically contracts the monetary supply. The $10 billion DeFi madness. Merre then shifted his focus on DeFi, the $10 billion crypto subsector that has lured thousands to the promises of making free millions but seems to have largely ended in despair for the retail crowd. DeFi is hitting all the right buttons for speculation. Cause we've seen thousands of % of yields in one day and the same 99% drops a day later. So I think it is very creepy. I think you have to really watch out what you do, said Merre. Nobody knows. You can read full post on CryptoFans News, link available in text below.